Hey, good afternoon, everybody. Going to go over our Forex trades for today, Thursday, July 30th. Busy day, very busy day. Let's get to it. All these trades were included from this morning, last night, and Tuesday night because we didn't trade Wednesday because of the FOMC meeting. The Fed left interest rates unchanged, basically said nothing different than they said in the June meeting. There's no August meeting. So September is the next time that they may possibly raise interest rates. So September right now is about little less than, it's less than 50-50 chance according to the Fed Fund Futures. It's about 30% chance they may raise in September, 50% chance by the end of the year, and I think it's 70% chance that it'll happen in the first quarter of 2016. GDP numbers came out this morning, which showed a second quarter GDP of 2.3%, which missed estimates of 2.5%. For the first half of this year, we're growing somewhere in the neighborhood of 1.6, 1.7%. So that on an annualized basis, so that's absolutely horrible. I think we've been arguing all along the Fed needs to raise interest rates really just to normalize rates, not that the economy is strong enough to justify raising rates, especially what's going on in Europe and Asia. But I don't think the Fed will admit that. So they did all this QE, which doesn't, I mean, all this QE should have this economy flying. It should have the economy pumping and grinded. Tremendous growth, inflation. We don't even have 2% inflation in this country. Inflation rate's under 1%. I mean, excuse me, under 2%. And you have basically zero-bound interest rates. It absolutely doesn't make sense, but that's what's happening. And the Fed has to deal with what's going on. They try to paint a very, very rosy picture. But raising rates just to normalize them, I think they should really just admit it and get it on. And we've explained in other videos why we think they need to normalize rates. And I think that if they normalize rates, it would actually help the economy rather than hurt, because normally it slows economies down. But and we've explained that in the past. I don't have time to go into it today, maybe next week, because we had so many trades. Also, Goldman Sachs, Lloyd Blankfein, I think he's the CEO of Goldman Sachs. He came out with an interview on Bloomberg. I think it was yesterday or last evening. He said he expects a jarring event if and when the Fed raises rates for the first time, but he believes it's going to be very short-lived because the Fed has already admitted that when they start to raise rates, they're going to do it in a very conservative fashion. And as he said in the interview, that once the market pulls back from the first raise of rates, people will pull out the smelling salts, wake up, and realize the Fed is on their side. They're going to be very conservative about this, and the market will rebound rather quickly. So it'll be interesting to see. I mean, Goldman Sachs, they're it on Wall Street. Not that they're always right, but they make a lot of good calls. So let's get to our trades. We had 14 trades between, like I said, the last couple of days, avoiding the FOMC meeting. We did have some positions heading into the meeting. We had got out of some prior and held some throughout the meeting. So we had, and with that volatility, we got some fills on these swing trades. And we had a couple of scalps last night, a couple of scalps on Tuesday night. So we had 14 trades, pulled out a total of 50.6 pips on a size adjusted basis. On a non-size adjusted basis, we actually pulled out 387.2 pips. Granted, that's over a course of 2 days, so it sounds a lot better, but it's over, you could say it's over 2 days. And also, it's the end of the month, and the last few days of the month, we always cut our size in approximately half, which we did with these trades. So let's get to it. First one you're looking at here is Canadian dollar, Japanese yen. We were short this 95.976. Pulled out 48.4 pips, or size adjusted 7.2. We had a lot more in the bag. The algorithm just didn't give us a signal to cover. We probably should have overridden it and covered it, obviously, but we left a lot in the bag there. But still 48.4 pips, size adjust 7.2. We'll take that every day. Excuse me. Pound again. We were long 192.515. We sold this 192.895, picked up 30.0 pips. Size adjusted 3.8 pips. we had 10% of our normal size there. Went in our favor right off the bat. We just didn't get enough of the position. We could, with swing trades, we could go up as high as, call it 20%. We feel comfortable with 20%. I mean, we could go higher, but 20% is pretty good because we could put on several swing trades at one time. Then we were long. We also had a signal go long 193.133, and we sold this 193.625 for 49.2 pips. On a size adjusted basis, that's 7.3 pips. On that one, we had 15% of our normal size. Australian dollar, Japanese yen, we were short this 90.664, covered 90.631, picking up 3.3 pips. This was a full scale scalp. So on scalps, you just grab whatever you can. Obviously, we were out way too early on this. Should have easily been covering closer to the half figure, and then it went through the half figure, came all the way down to 30. We left a bunch on the table there. Euro, Australian dollar. First one you're looking at here is a long of 1.50897. Again, this was a full scalp there. Picked up 3.9 pips. Again, left a bunch on the table, as you can see. That was Tuesday night. And then last night we had a long on this pair, 1.50151. Picked up, got out 1.50230, picking up 7.9 pips. Excuse me. It looked like a good trade. It looked like we got out in a decent area. It did go as high as 1.50250. But you can see what it ultimately did. But again, these are just scalps, full scalps. You're going to take 3, 4, 8, 12, whatever you can in a quick manner. So if they don't move quickly, or if they move quickly and they start to stall, you got to get out. If they don't move quickly, it's a little bit of a bad sign, and you might want to just wiggle away out somewhere with a small profit or a small loss. At most, you're going to risk is 10, 15, or 20 pips, maybe 30 pips tops. New Zealand dollar, US dollar, we were short this 0.66992, covered 0.66839 for 15.3 pips. Size adjusted 1.5 pips. We had 10% of our normal size on that swing. Algorithm got out in a decent area. Unfortunately, just couldn't put on more of the position. Then we were short 0.66871. Got out 0.66752, picking up 11.9 pips. We had 10% of our normal size as well, picking up 1.8 pips. Obviously, you can see what happened. The algorithm got out way too early there. We left a bunch on the table. I mean, this could have been a phenomenal day. Euro US dollar, we were long this 1.10548. We only had, I think it was 5%. Let me see, Euro US dollar. No, excuse me, 15% of our normal size. We lost 40.7 pips when we got out. We probably should have overridden it somewhere with somewhat of a profit. The algorithm just wasn't getting the place to get out, and then the FOMC came and ended up stopping us out. 40.7 pip loss, or 6.1 on a size adjusted basis. Aussie US dollar, we were short this 0.73069, covered this 0.72885, picking up 18.4 pips. We had 15% of our normal size, so good place to get out, really, by the algorithm. Then short 0.72977, covered this 0.72811, picking up 16.6 pips. What are we on? Aussie US dollar. We only had 5% of our normal size here, so we picked up 0.8 pips on a size adjusted basis. I mean, it was a decent area to get out. Could have maybe got out a little bit more, but the size was so small, it was really irrelevant. US dollar, Canadian dollar. This one we had small size, 1.27908. We've had this for a couple weeks actually. Got out 1.29493 for 158.5 pips, or size adjusted 7.9. We were looking for 131.50 to 132.50. You can see it went to 131. Looking back, we should have overridden this, and we would have been able to grab a lot more. on the upside. But fact of the matter is we didn't. But would have been a nice. It's still a good trade. Now you twist it and turn it. Euro CAD 1.42183. We sold this 1.42191. This was a full scalp. Just picked up 0.8 pips. It was one of those trades that just it wasn't going, and so we had to make the decision to get out. Obviously, we made the wrong decision on the full scalp. It went higher. Went all the way as high as 1.4242. Granted, that was early this morning. You're not going to hold a scalp overnight, but even if we would have waited a matter of a half an hour or 45 minutes, it went to 1.4226. So we left at least, call it 4 to 5 more pips on the table. But we'll, 0.8, it's really irrelevant. U.S. dollar, Japanese yen, we were long this 123.575. And we got out 124.132, picking up 55.7 pips. We had 15% of our normal size. It was a really good trade. Caught a really nice trend, as you can see there. It's still trending higher. The algorithm got the signal to go to liquidate. Looks like that trend may have been maybe starting to stall out here, because you can see this is the longest consolidation period it's had during this entire trend. You can see a small one here, small one here, very small here, small here. This is definitely the longest. So the next few hours on this U.S. dollar Japanese yen are going to be very critical. She's either going to continue higher or she's going to break down and start to roll over. So we'll see what transpires from that. So that's it. Very, very busy 2 days for us. The FOMC provided some volatility to get out of some swing trades. We don't scalp the FOMC, but we'll be looking to scalp, possibly tonight. Most likely we'll not trade tomorrow. We'll see what happens. It is a Friday in the summer, which is usually very, very, very slow. So, and as a matter of fact, this morning, even with the GDP numbers, it wasn't that action. There wasn't really a whole lot of action. I mean, we avoided it, but then even afterwards, things kind of trended. It didn't provide the volatility like yesterday with the FOMC. Anyway, so we're going to wrap it up. That's it. If you're still trading now, good luck. If any signals come out, they'll be coming your way. If we don't do a video tomorrow, have a great weekend, and we'll be back maybe tomorrow, but definitely by Monday.